All right, it's Friday. Um, Here in the live trading room, we're calling this Free Fall Friday, thanks to Michael. Um, Lots of news has impacted the market today, as it always does. It's been a little more dramatic. You're going to start to see some fairly dramatic financial headlines, financial news headlines, contagion in the market, death spiral, bloodbath. There's all sorts of things like that people talk about in financial media when there is a major market move. Before we get to the charts, I want to talk just for a minute about just a philosophy I have about good trading. When it comes right down to it, being a good trader and good trading is actually boring. It can be very boring. And that's one of the reasons we enjoy hosting the live trading room, because we enjoy working with everyone in the room. We enjoy hearing your successes, hearing your stories, learning a little bit about you. And we enjoy working with each other as a team. Now, good trading is boring. That's my opinion. Gamblers, who a lot of traders are gamblers, they're seeking a level of excitement, kind of the sizzle of the trading, but they're generally not good traders. Good traders are seeking consistent profits. So if you happen to be on the right side of a trade and you get the benefit of a big move like we had today, that's great. We did have a position today. We took about $9,000 of profits on that one position because we had decided, we'd made a conscious decision to leave a two-contract put trade, two-contract long put position open with no short put sold against it. We'd made a conscious decision after evaluating what our options were, evaluating how much time we had left in that trade, and it wasn't a hope and a prayer trade. It wasn't a we're going to put this on and we're just going to hope that everything's going to work out. No, we made a conscious decision. We knew what our risk was leaving that exposed, and we knew what our action would be if we had left that exposed and the market had moved in the opposite direction. We knew we had time built into the trade, and we knew what other actions to manage that trade we could take. So we approached that trade, as just using this as an example, from a standpoint of evaluation and making a conscious decision, not throwing something out there into the market and just hoping that it's going to work out. As it turned out, we got a windfall, over $9,000 of profits on that trade when the market just sold off aggressively this morning. Those aren't the types of trades we are positioning ourselves for, but they are the types of trades that periodically you win on. What we really position ourselves for are consistent trades, one trade at a time, over and over again, recycling our capital. And as Michael often says, base hits. We just want base hits so that we can accumulate a consistent stream of profits. So I just wanted to help you understand there's a big difference between what I consider to be good trading, which is essentially boring, and good traders who seek consistent profits versus the gamblers. So I would challenge each of you who is listening to this, each of you in the live trading room, if you stood in front of a mirror and really asked yourself, frankly and honestly, are you choosing to be a good trader and building your positions accordingly, doing a thoughtful evaluation of your charts, thoughtful evaluation of your positions, or are you kind of rolling the dice on the table and just hoping that something's going to work out for you? I can almost guarantee that if you recognize yourself as a gambler, that you're not going to win consistently. In fact, you will probably, more than likely, at some time blow out your account and you might be out of the game. I also know that if you're a gambler, you can retrain yourself, you can condition yourself, and that's what we're here to help you do. We don't gamble in the trades that we take in the live trading room. We have some fun with it, but we're basically looking for trades that we can get into that will allow us to be consistent with our profits. So let me talk about the charts here. I'm actually seeing some signals here to go short on all three of our indexes. And yeah, hold on just a second. Okay, so I'm going to start with NDX. Normally I'm looking at a shorter time period, like a 10-minute, but I want you to see what the longer time period is here. This is a 1-year daily chart, and I think it's very, very important for you to take a step back and look at the big picture. Doesn't matter what kind of anxiousness you have about the charts or what all the news and media is talking about in terms of sell-offs. We might continue to go lower, and I actually think we will continue to go lower in the big picture. But here's one thing that I see. We are trading in a declining channel. Now, this declining channel, particularly resistance of this declining channel, should not be a surprise to you if you've been with us the last several days. We've been talking about this declining channel. Yesterday at the close, I'm going to get rid of the other studies here for a minute. Yesterday at the close, we moved right up to resistance of that declining channel. That's where we closed. This morning, we gapped significantly lower. Now, before this morning, I had support coming off of this natural level of support here that occurred on the 16th. This morning, when we moved lower and then bounced off of that, I adjusted my channel and I pulled support down to that low that we formed today. So we currently have a channel that is in a 171 point range. Now there are a couple of things that I see here that I want to point out to you. Again, I'm going to preface this so I don't have to say it every time that I make a comment. I'm going to preface all of this by saying I'm providing no guarantees and no certainties. What I am doing is I'm showing you what could potentially happen based on the signals. So we're trading in this declining channel. We confirmed resistance multiple times. And now this morning, what we've done is we've formed a natural level of support. And that means that we formed a low and we moved higher off of that low. So that's where we have support. This pattern tells me that we could potentially move back up to resistance of this declining pattern. And if I just went out a few days and I looked at where that resistance might be, we could move back up to the 44, 42 range. It would depend on where we would hit this level of resistance. And I'm not saying that we're going to move all the way back up there. I'm just saying if we have an established channel that has been validated at multiple different price points, why would we not assume that there is a reasonable possibility that we could in fact move back higher? Okay, that's a possibility. We also have a possibility that we could continue to trend lower and follow along this level of support. There's also a possibility that we could just break below the support and continue to move lower. Now, one other very significant factor for me personally is that we are on a daily chart and we have a significant Bollinger Band snap pattern. That means that the current price of the index, trading at 43.03, is trading well below the 2 standard deviation Bollinger Band. And historically, when I see that type of a pattern, there is a bias to bounce back to the upside. And I don't mean that that necessarily is going to happen immediately. There are periods of time where it may walk along the lower Bollinger Band or the upper Bollinger Band before it shows that bounce. But it's such a significant pattern in my experience that I pay attention to it, and that's why I wouldn't be surprised, although I'm not predicting, to see the index bounce back higher. It could bounce all the way back up to resistance, or it could bounce back up and retrace maybe as much as 50% of the range of movement from the high at the close of yesterday to the low that we hit this morning. A 50% retracement of that decline would put us right around 43.80. So there's a reasonable possibility that we could move higher, as well as there's a reasonable possibility that we could continue to trend lower along our line of support. Now our AbleTrend charts, our 3-minute, 9-minute chart, and our 5-15 chart are showing that we are double stacked to the downside, but we are trading in a very tight, narrow range. We're trading right at resistance, the 3-9-minute resistance. There's not a lot of spacing between 3-minute resistance and 9-minute resistance, so we've narrowed ourselves into a very tight range. Those are the types of patterns that I think it's reasonable to expect that you're going to have some sort of breakout one way or the other. We could just continue to break lower. And when I back up on this 1-year chart and I look at the biggest picture view from a daily perspective, this red declining channel has a lot of room to move to the downside. And again, I'm not saying we're going to move all the way down there, certainly not all at one time. But if we were to move down to the 3750-ish range or 3800, it shouldn't be a surprise to any of us. We should know that that is a possibility. And one of the things that I'm aware of, just like I'm aware of this Bollinger Band snap pattern that could push us back higher in this declining cycle, the other thing I'm aware of is Michael was calling out this morning in the live trading room that our long-term daily NDX AbleTrend chart has printed a sell signal indicating that there's a strong bias to the downside. So when we say there's a bias to the upside or bias to the downside, on these longer term patterns, that doesn't mean that we are implying we're going to move there immediately. It means that we want to keep that big picture in view. We want to keep that macro view of the pattern in our thought, and then we want to take our trades based on the 3 9-minute charts and the 5 15-minute charts. We want to look for those entry signals. After the big move down this morning, we've had several trades that we've placed as day trades, where we've gotten into the trade and we've gotten out of the trade in just a matter of a few minutes, maybe a half hour, maybe an hour. But we've been in and out of several trades today, and every one of those trades was prompted by the 3 9-minute AbleTrend charts. I know where we're trading. I know where we're sitting inside of several different time periods on my bar chart. It doesn't prevent me from taking a trade on the 3 9-minute. I'm just aware that we could move in either direction, and I want to protect myself accordingly when I'm taking one of those trades. Now let's look at our more traditional 10-minute. And you'll see what happened this morning is we came down hard. We formed a natural level of support by coming all the way down here and then bouncing off of it. And then since, we've been actually trending lower. We have a series of lower lows and lower highs. Will we come all the way back down to this support and validate it again? I don't know yet. We're going to have to wait and see. Could we break through the support? I don't know yet. We'll have to wait and see. Could we stall a little higher off of the support and maybe start the formation of a rising cycle? I don't know yet. We will have to see. So what I've been doing today on NDX in particular is I've been identifying this cycle as we've been progressing lower. What I'm looking for is, and have not found it yet, I'm looking for the next natural level of support. That price point that comes down to a low, bounces higher, and starts to form a series of price points higher, where we can identify a certain price bar, a 10-minute price bar, as another natural level of support. So this is the pattern that I'm tracking right now on NDX, and I'm going to continue to track that and look for opportunities. A day like today is a lot of fun for me. As I mentioned earlier, trading can be kind of boring, but a day like today is a lot of fun. And the reason it's fun is because my friends and family who know what I'm doing and that I'm involved in the markets every day, they start getting a little concerned. Oh man, I heard that the market is really selling off. Market's tanking. It's horrible day in the market. All those types of things, and I'm a little bit giddy about what's going on because we're actually up just over $13,000 of profits for today. We we are able to leverage profits regardless of which direction the market is moving. And sometimes we get a big win, like I already shared with you. About 9,000 of that 13,000 is from one position that we closed out this morning. And so if you set that aside, we've still accumulated over $4,000 of profits today just from our ordinary trades. Not all of the trades were downward bias trades. I actually made money on 2 trades this morning that were rising bias trades taking advantage of this bounce right here. So my message to you is, aside from deciding firmly that you choose to be a trader and not a gambler, and there is a managed amount of risk that's associated with being a trader, and you're going to accept that risk and you're going to manage that risk accordingly. But aside from that, the ability to set aside emotion about what's going on and being influenced by emotion from the news is a key to being successful. Now, why on earth would I take a rising bias trade right at the market open when everything seems to be going to hell? The news is all about how horrible things are. The news is all about the major and dramatic impact that the vote in Great Britain is having on the markets. Why would I take that trade? And it's very simple. It's because I wasn't concerned about the news. I didn't really care about the news. I was simply following the technical patterns on my charts that I have always followed and have proven reliable for me. Reliable being not 100%, but reliable to the point where I'm going to take that trade. I'm not going to immerse myself in the emotional quagmire of the news. I'm going to take a look at the pattern. In this case, it was simply a Bollinger Band snap pattern. When you exceed the Bollinger Bands by as much as we did this morning at the open, there's a very high probability that the price of the index is going to bounce back higher. And that's exactly what happened. And I was able to actually grab some very nice profits on 2 trades that were bias upside. And then after that, grabbed profits on another 3 or 4 trades that were biased to the downside. So we're trading both directions of the market. We're keeping in mind what the channels and cycles are telling us, and then we divert our attention almost exclusively to the 3 9-minute AbleTrend charts and the 5-15 AbleTrend charts. Those are the workhorse for us in terms of generating profits. So we're pretty happy with today. We're pretty happy with the month. So that's the update for today. Let me just quickly take a look at SPX. SPX is the same thing where it came down hard. We're trading right now right at a level of support, waiting to see whether we confirm that. Nothing unusual there. And it feels really good as a trader to say there's really nothing unusual going on when there's been such a major sell-off in the market, and really all we're doing is capturing profits. And this is very similar in RUT, where you can see here that we came down to a natural level of support. We seem to be trading a bit lower than that now. So here is a pattern that I'm going to start to track, and I will wait for validation to see whether or not that is an accurate interpretation of the cycle. If it is, then don't be surprised if we move back higher within the cycle, but the cycle has a declining bias to it. Moving back higher in the cycle could take us up to around the 1137 range, and then maybe the next low would be lower than the previous lows. So all of those things are in my thought as I'm choosing trades and choosing positions that I want to open. Um, the last comment I have is that we're really happy about the profits we take in our live trading room account, and it is a live cash account. Everybody in our live trading room can see every single trade I place. They see every profit I take. They see every challenge I have with a trade. They see every challenge we have with opening or closing a position. We had some significant challenges this morning because I think the brokers and the markets in general were having a hard time keeping up with the volume of activity that was hitting the markets. So there was a delay in us being able to fill our trades. So what? It's just something that happens. It's an inherent part of trading when you're working in an online environment. It doesn't prevent us from taking profits. Did it prevent us from taking maybe some bigger profits? Possibly. But let's stop measuring what we missed and focus on what we actually captured. Because what we captured is what we can spend. What we missed, that's just a great story over a beer someplace with a bunch of friends. Yeah, I could have had so much more. Well, if at the end of the day or the end of that trade, the end of the day, the end of the week, the end of the month, you have a plus sign in front of whatever number your performance is showing, you should be happy. But what I was going to say is what really delights me and my entire team here at Options Moneymaker is many of the people in the live trading room share their results with us. They tell us that they made X amount of profit on this trade or that trade, that they have been making great money for the week. They followed us on some of the trades and they thanked us for the trades and they made great money on them. And that is what we really thrive on. We love when everybody in the trading room is making money and when they're sharing those results with us. So we appreciate the fact that those of you in the live trading room do share those results with us, and it makes trading a lot more fun for us. So that's the update for today. Let's get back to trading and see if there aren't some other trades, other opportunities we can take.